we look at the valuation of the S&P 500 prior to each collapse and crash, we're at that level.
We hit an all-time high in end of August.
Right now, it's very high and indicative of a bubble and a precursor to the market, the stock market substantially going down. So let's talk about one of the specific real estate investments. It's a DST. Hello and welcome to the Wise Money Guys radio show. I'm your co-host, John Scambray, and I'm here with my partner,
Giuseppe Visconti.
By the way, we're certified portfolio managers that specialize in helping people who are retired or about to retire manage their money. If you like our show, have any questions, or want to meet for a no-obligation consultation, give us a call at 916-967-3500. Again, 916-967-3500, or you can visit our website, which is wisemoneyguys.com.
Or search for us on YouTube.
Yep. If you'd like to watch us doing this show, you can find us on our YouTube channel, which is also Wise Money Guys, or at Wise Money Guys. But I think if you just search the Wise Money Guys,
I've also tested it out. You can actually just put our names, John Scambray and Giuseppe Visconti. It'll pull up as well.
There you go.
And all the pertinent disclosures are on our website towards the bottom as well.
So we got a pretty good agenda for you this morning. First of all, we absolutely have to mention and just the horrific event of this last week, which was the brutal assassination of Charlie Kirk. Yeah. I can't even imagine. We were talking about this when it happened, that, you wake up, you kiss your wife and kids goodbye, and then you don't come home.
So go on about your day thinking it's going to be a normal day.
Just a normal day, and then you don't come home. I mean, just
sad.
Our hearts go out to Charlie Kirk and his family. Just devastating news. And for kids all across, what's interesting about that? Now, we're students of the news, obviously, and research and information, being money managers.
Right.
So naturally, as it happened, we're seeing headlines, scroll across our screens. But my kids my daughter Madison was like, seeing Charlie Kirk was on my bucket list. He was only 2 years older than me, and they had a text that we have a text that we call the Scam Fam group.
Yeah.
And Jessica, Katie, Maddie, they were all like, "Oh my God, they all knew who he was."
Yeah.
And they're all in their 20s.
Yeah.
And so Charlie
Kirk,
Kirk,
he went across a bunch of college campuses.
Huge following.
Oh, yeah.
And my kids are recent college graduates. And so but the point is I was just surprised they didn't
know how big he really was,
Charlie Kirk. Yeah. And what impacted me most about that conversation was that he was huge. Yeah. I mean, he had millions of followers.
Oh yeah.
And so many kids were
I would watch his YouTubes because I just enjoyed the debate aspect of it and just the critical thinking, and also just to kind of see where this generation of kids at different college campuses and where they were at. Not so much of their opinions or what side they were on, but more so on how they handled the debate, how they handled critical thinking, how they handled logic, just and reason, right? Outside of just the pure academic book study. Let me look it up. This is a fact that he did a great job of exercising people's minds, really.
Yeah, my concern is about Turning Point USA and how do they continue that work they were doing to, help kids in college, learn another viewpoint, right? Because
Candace Owens was out there, Vivek was out there. There was other people that were out there with them, so maybe they pick off, from that. I know Ben Shapiro did a little bit of that as well at different college campuses. So. Hopefully it continues on.
Well, because now, how many universities was Turning Point USA?
I don't even know.
Had chapters in. I mean, hundreds, and hundreds of thousands, if not millions, of students. Following just his conversation and his thought process on family values, on religion, on having children, on getting a job, on making money, on just what's funny, he really wasn't, even though a lot of his conversations were political,
Well, yeah,
he
for
was
sure.
more evangelical. I think he was more like
Partly,
a
partly, yes.
preacher or a minister
Yeah.
versus a politician. And
It wasn't pure politics. It was also like driving towards faith and family, and
I would say more
and family
faith and family than anything.
values.
Yeah.
Yeah.
But
It's definitely unfortunate. It's sad. Whether you agreed or disagreed with his personal views. I mean, he was just overall just an innocent person who shared ideas and debated and challenged. And I think the great thing about it all, whether you disagreed or agreed with them, that's what America's made up of, right? It's agreements and disagreements, or to agree or to agree to disagree.
The assassination, we're finding is going to be out to shut up, somebody who's trying to teach something different in college, because for decades colleges have clearly been very one-sided in their views and really dislike of America and American values and family values.
I mean, not all colleges. There's a lot.
Certainly all the Ivy Leagues. I mean, do we have to go into the Harvard riots, the Columbia riots?
No, I know.
The anti-Semitism, all that
ones.
stuff. Yep.
But there are other ones out there that, are completely on the other side.
Yeah, but not many. More on one side versus the other. But that's the impact Turning Point USA was having, was just getting
bringing awareness,
a different voice out there. So super sad. Hopefully Turning Point USA goes on, but just absolutely is wrong for one person and one committee to literally control the financial markets around the world. I mean, it's that simple. You could argue and say, oh no, but they only have control of a few things here in the United States, but their policies literally affect markets around the world because they follow.
All markets will be next week in the FOMC meeting and Jerome Powell's speech on Wednesday. All the world markets are going to be paying attention to it.
So I hope there's a big shakeup next May when he retires, and they name somebody who's more of a true capitalist, more of a true free market mentality when it comes to
and they have a frame
its responsibilities.
And they have a framework and process that they go about, and they don't keep changing it and be like, we're going to be data dependent. No, we're going to be forecasting and what we think is going to happen, so we're going to make decisions based off of that, and flip-flopping. It's what are you going to actually do?
So getting back to the Fed, here's what scares me. The market, the probability, the options market is betting on a quarter of 1% cut off of the Fed funds.
That's pretty much cemented in,
right? But we say that,
and there's a small probability out there on bets that they'll cut 0.5%.
But there's also even smaller probability that he cuts none.
That they do,
because we were just saying how the Fed is flip-flopping from data dependent to forecasting and making their decisions, when they're supposed to be data dependent according to how many times has that come out of Jerome Powell's mouth?
Right.
And so a couple of concerns there, and something you should watch for. If it's a quarter and that's what the probability is predicting and what the market thinks and what guys like Giuseppe, I think, that manage large sums of money, okay, then the market's just going to ho-hum along and probably continue this year that it's having to be a decent year.
Well, it depends on that, but also future potential cuts in the dot plot.
Yeah.
So if there's an increase on that, then that will continue to, quote unquote, melt up the market.
But here's what I'm looking at for next week is if we get a 50 basis point cut, I think the market actually sells off. And the reason being, so two scenarios where I think the bubble, the stock market bubble, because we'll talk about that later in the show, that we certainly could be in a stock market bubble based on the valuations of the S&P, the average valuations of the S&P 500 companies, is If we get a 50 basis point cut when the market is expecting a quarter, then that might scare people into seeing, well, what does the Fed see? What's really wrong with the economy? And that will be the catalyst for some profit taken, which we've been recommending as a strategy to reduce your stock exposure and lock in some profits, by the way. And we still are on that same path. We don't think get out of stocks because there's some great ones out there, and there's still great values and good stocks to buy.
And they can continue to climb up, even the valuations are high.
Yeah. And then the other side is, what if there's no rate cut?
Yeah, that would be the big surprise.
And one of the slides we showed our audience last night was, if we look at the valuation of the S&P 500 prior to each collapse and crash, we're at that level.
We hit an all-time high at the end of August.
So what that basically means is, when you take all 500 companies in the S&P 500 and you see that, and you take their stock price and you do some basic math to see what level of multiple they're trading above their earnings, then that's a simple valuation tool to then say whatever that multiple is, it's either very high, traditionally, it's kind of in line with an average market, or it's very low and it's undervalued and it's a good time to get in. Right now, it's very high and indicative of a bubble and a precursor to the market, the stock market, substantially going down. It doesn't mean it's going to happen.
Well, yeah, it will happen. Just when will it happen? That's the question, right? It will happen.
It always happens.
But when will it happen? And, it can continue. The term that's used quite a bit is melt up. It's these valuations, these higher valuations and lofty levels can continue to build upon itself, especially if we have the Fed rate cut 0.25%, and then also indicate maybe more cuts in the future than what was expressed in previous meetings. That's going to continue to feed the market, right? And to continue to price in higher valuations and especially with the AI euphoria back in play. So all these things can continue to bring up the valuations of the market. Market can continue to climb. But on the other side is, if it continues to climb and get higher and higher and higher as far as the valuation, and gets away from the averages, then that means when it does correct and pull back, then that's going to just be a harder fall.
So let's talk about one of the specific real estate investments that we talked about. It's a DST is the main one that we spent a lot of time about, which stands for Delaware Statutory Trust, and that's just the wrapper over the actual real estate holdings inside of the portfolio. So when you invest in this, you are actually a real estate owner. So it is a way to take a percentage, albeit a small percentage, of a much bigger level of real estate holdings than just having, say, one single family home or multiple single family homes, or maybe you got a duplex or something, or maybe a small commercial property of some kind. This gives you a lot more choice as far as, because there's not just one of these. We have multiple of these that we like for different purposes with different types of property inside of them.
Right.
And the good news is, this DST one that you absolutely can call or come in to get more information on has paid about a 6%, just under a 6% distribution rate.
6 to a little over 6, actually, for the past 5 years.
So that's your cash flow. But the wonderful part about this is you can 1031 into it, which means you can get out of your capital gains tax on whatever property you currently have and exchange it into this a portfolio. But the best part is the return on investment, the distribution rate, 90+% of it is not taxable, because they pass on depreciation. They pass on, expense. Even though you're not directly taking that, you still get the benefit of the 6% return being mostly not taxable. And that is gigantic. You cannot do that in your single family home or your basket
unless you're personally managing a whole portfolio and taking advantage
Right.
of it and have a great CPA. But on top of that, when you look at the total return and an annualized basis,
what the value of the holdings grew to too is what you're referring
including the dividend. Yeah, the total return, which is dividends and the growth of the investment itself, the total return is just under 13% a year in what it's achieved annually over the past 5 years.
That's all the time we have. You've been listening to John Scamri, Giuseppe Fiscani, the Wise Money Guys. Have a great weekend.
Have a great weekend. Talk to you next week.